look, a lot of people are opining their 2020 strategy outlooks. I've read a couple of them the last few days, and everyone seems to be mildly optimistic about the outlook for next year. The vernacular there, Matt, is, look, you know, President Trump wants to be re-elected. He wants a strong economy. He wants a strong share market. He's probably going to put the China trade deal to rest and allow the business and consumer sentiment to lift in the US. The biggest risk is the one that no one focuses on. So in my view, and it's a real tail issue, it's inflation. So the market is, you know, every market participant, including every central bank, is fighting you know, this total lack of inflation, and if it ever comes back, we're just totally not prepared for it. So it's not something I see happening, but I think it's the big risk that if it does happen, or even if the market thinks it's going to happen, we could see a sharp reversal in bond markets, and that would obviously cause issues for the equity market as well. So there's a heck of a lot of stimulus out there. You just, you know, Japan just announced some more measures, Hong Kong more measures. There's lots of stimulus out there. If inflation catches any sort of bid into 2020, then that's going to be a fox in the henhouse, so to speak, for markets. So that's the big risk that I see. I don't see a high probability of it happening, Matt, but I see a lot of damage if it does.
Could higher oil prices be what delivers us a tick up in inflation? You would have heard our reporting earlier on in the show at OPEC and the fact that we could see further production cuts announced in the next few days in a move to push prices higher. Could that be something that triggers this much awaited tick up in inflation that has, of course, been missing for the last couple of years?
Yeah, historically, that's what causes inflation. If you go back, you know, to the 70s and the OPEC crisis, the price of oil went from 2 to 20. We're not going to see anything like that. I mean, it doesn't hurt. Obviously, most economists take food and energy prices out of the CPI to sort of remove the volatility. So we kind of tend to look through energy. But I think the whole commodity price inflation more broadly, we've obviously seen copper improving, iron ore's been much better. So industrial metals generally are getting more expensive. I think if we throw oil into that mix, that's really supply restraint rather than demand. But yeah, it helps build the picture. And obviously in some markets, wages are starting to go up. So there are sort of the preconditions for an increase in inflation, but it's certainly no one predicts it's to get out, the genie to get out of the bottle. But that's why I see it as a risk, as no one expects it to happen.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.